Amazon plans to lay off approximately 10,000 people in corporate and technology jobs as soon as this week, in what would be the largest job cuts in the company's history. The cuts will target Amazon's Devise Us organization, which includes the voice assistant Alexa, as well as its retail division and human resources. The number of layoffs is still fluid and will likely be implemented team by team rather than all at once as each business completes its plans. However, if it remains around 10,000, it would represent roughly 3% of Amazon's corporate employees, and less than 1% of its global workforce of more than 1.5 million, the majority of whom are hourly workers. Amazon's planned retrenchment during the critical holiday shopping season, when the company has traditionally valued stability, demonstrates how quickly the global economy has put pressure on it to cut businesses that have been overstaffed or underperforming for years. The tech layoff storm. Amazon would also become the latest technology company to lay off workers, whom it had only recently fought to keep. This year, the e-commerce behemoth more than doubled the cash compensation cap for its tech workers, citing a particularly competitive labor market. Changing business models and a shaky economy have triggered layoffs across the tech industry. Elon Musk cut Twitter's headcount in half after purchasing the company earlier this month, and Meta, the parent company of Facebook and Instagram, announced last week that it was laying off 11,000 employees, or roughly 13% of its workforce. Lyft, Stripe, Snap, and other technology companies have also laid off employees in recent months. Why Amazon is laying off 10,000 workers. As a result of the pandemic, Amazon experienced its most profitable era on record, with consumers flocking to online shopping and businesses flocking to its cloud computing services. In 2 years, Amazon more than doubled its workforce and invested its profits in expansion and experimentation to find the next big thing. However, earlier this year, Amazon's growth slowed to its slowest rate in 2 decades, as the pandemic's bullwhip snapped. High costs were incurred as a result of the company's decision to overinvest and rapidly expand, while changes in shopping habits and high inflation hampered sales. In the most recent quarter, Amazon experienced a slight rebound. However, it has warned investors that growth could slow again, possibly at the slowest rate since 2001. Amazon's hourly employee layoffs.